Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
The US dollar index has seen a modest increase, trading at 105.50. This rise can be partly attributed to the cautious remarks from Federal Reserve members who emphasized that interest rates would remain high as long as necessary to bring inflation down. In addition, there won't be any significant developments related to the U.S. economy until next week when the April CPI data is released. The dollar has continued to see modest gains for the third consecutive trading day this week. As Israel appears poised to begin a ground invasion of Rafah, and Egypt strengthens border controls along its northern border with Gaza, the market has once again absorbed some risk premium. Gold prices have been unable to make a decisive move in either direction and are consolidating in a narrow channel above $2,300. A slight rise in the benchmark 10-year U.S. Treasury yield, nearing 4.5%, has capped the upward potential for gold/dollar. During the week, gold prices fell as the U.S. dollar strengthened and U.S. Treasury yields declined. With scant U.S. economic data, investors will continue to focus on Federal Reserve officials following last Friday's U.S. employment report. Gold traded at $2,310 after reaching a daily high of $2,329. The financial market narrative focuses on when the Federal Reserve might start easing policies following the release of weak economic data. After the EIA report, oil prices nearly erased all intraday losses. WTI crude prices rebounded to near the day's high of $78.90 after earlier falling to $76.60. The Israeli War Cabinet voted to continue military strikes against Hamas, with Israeli forces targeting the southernmost city of Gaza. The Energy Information Administration stated that any signs of escalating geopolitical risks in the Middle East could lead to significant increases in oil prices. Additionally, concerns about disruptions to oil supply have eased, which could weigh on WTI prices. An increase in U.S. crude inventories exerted some selling pressure on oil prices, as this is often a sign of weak demand.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment. Remember to join us tomorrow morning for the freshest news